Good evening. We are from Group 14 and we are going to present about the investment proposal analysis, which is the financial performance and growth potential of our selected 5 Bursa Malaysia companies. So, the Malaysian financial market plays a vital role in driving economic growth by enabling capital formation and investment. At the center is Bursa Malaysians, the main stock exchange offering diverse opportunities across various sectors. It's well regulated to promote transparency and investor confidence. This report aims to analyze and compare the financial performance of 5 listed companies, helping investors make informed decisions by accessing key financial metrics, risks, and strengths.
Inari Amatram Berhad is the leading Malaysian electronic manufacturing company. Established in 2006 and listed on Bursa Malaysia in 2011. The company specializes in semiconductor packaging and radio frequency testing, with operational in Malaysia, China, and the Philippines. Inari's strength lie in the advanced technology, strong brand reputation, and healthy financial performance with consistent profitability and operational efficiency. However, it's also faced weakness such as high operating costs, over-reliance on few key customers, and limited control over the upstream supply chains. Looking ahead, Inari is well positioned to grow through rising global demand for 5G, Internet of Things, and electric vehicles. Its strategy expenses and government support further boost growth potential. Still, the company must remain alert to the external threats like semiconductor market cycle, geopolitical tension, and rapid technological change. Overall, Inari's solid foundation and adaptability make it a strong contender in global semiconductor landscape.
Cita Holding Berhad was founded in 1979 as a small apparel business in Malaysia, originally operating under the name Cita Corporation SDN BHD. Over the years, it expanded steadily in the local fashion and apparel industry. In 2005, the company was listed on the main market of Bursa Malaysia, marking a significant milestone in its corporate journey. Throughout perspectives, Cita's strength includes strong local brand recognition bolstered by the Super Brand Award, a broad online market presence, and a diverse product range. However, weakness such as rising net loss, declining gross profit margin, and lower capital efficiency compared to industry norms are concerning. Opportunity lie in post-pandemic economic recovery, the growth of e-commerce, and potential product diversification. Still, the company frustrated from intense local competition, increasing operating costs, and rapidly shifting consumer preference that demand constant innovation.
Established in 1979, Kosan Rubber Industries Berhad is one of Malaysia's leading manufacturers in rubber industry. The company specializes in glove, technical rubber product, and clean room solution, exporting to over 190 countries worldwide. Kosan is renowned for its high-quality medical and industrial glove, serving critical sectors like healthcare, automotive, and infrastructure. Its strengths include global leadership in glove manufacturing and integrated operation, strong brand recognition, and solid financial health. However, challenge remains, such as post-pandemic demand normalization, rising costs, and slower growth in non-glove segment. Opportunities lie in increased global health awareness, aging population, and growing demand for specialty glove, especially within ASEAN. But the company must also negative industry overcapacity, regulatory hurdle, supply chain disruption, and currency volatility. Through resilience and innovation, Kosan continue to lead the way in delivering trust, high-quality rubber solution to the world.
Star Media Group Berhad, one of Malaysia's most prominent media companies with a legacy that stretches back over 5 decades. It was founded in 1971 and listed on Bursa Malaysia on 1989 and is significantly owned by the Malaysian Chinese Association, which is MCA. It was well known for publishing The Star, the Malaysian's top English language newspaper. Over the years, it has evolved into a diversified media company with operations spanning print, digital, radio broadcasting, and event management. It owns notable radio stations such as 988 FM and Surya FM. One of Star Media Group Berhad's key strengths is its trusted brand reputation as a reliable news source in English. Its diverse media portfolio and public listing provide financial flexibility and multiple revenue streams. However, the company faces internal challenge. This includes declining print revenue, heavy reliance on advertising, and a slower pace of digital innovations compared to more agile digital native competitors. Opportunities lie in expanding its digital footprints through mobile content, podcasts, and video platform. There is also potential in adopting subscriptions-based model to reduce dependence on advertising. Strategic partnerships can help extend content offering and reach new audience. On the other hand, Star Media Group Berhad also faces external threats from increasing digital competitions, shifting media consumption habits, especially among younger users, and economic downturns that could shrink advertising revenue further.
I'll be talking about Lotus KFM Berhad, a Malaysian company that has been a key player in the floor mining industry since its establishment in 1984. Originally known as Kuantan Flour Mills Berhad, the company rebranded in 2019 to its current name, Lotus KFM Berhad. Lotus KFM focuses primarily on the mining and trading of wheat flour, premix flour, tapioca, and cornstarch. Besides food-related products, it also engages in industrial trading, forestry operation, and the wholesale of timber and lumber, making it a diversified player in both the food and industrial sector. The company's main strength lie in its long-standing industry presence and diverse product range. Over the years, it has built a solid reputation, especially in the flour mining sector. However, Lotus KFM faced key weaknesses, including very low profit margins of only 0.29%, stock underperformance, and heavy reliance on raw material import, which make it vulnerable to global price fluctuations. There are still significant growth opportunities. These include expansion into new markets, adoption of new technologies, and strategic partnerships to improve both efficiency and competitiveness. At the same time, the company must manage threats such as intense industry competition, rising operational costs, and economic instability, all of which could impact its long-term sustainability. In summary, Lotus KFM Berhad has a strong foundation but need to overcome several challenges in order to unlock future growth and improve profitability.
So, which company is the best option to invest? After comparing 5 companies, we choose company D, which is Star Media Group Berhad, as a best investment option. First, it shows strong profitability with the highest net profit margin of 26.98%, proving it's very efficient at generating profit. Its ROE of 9.38% is also healthy and sustainable without relying heavily on debt like some competitors. Second, the company have excellent financial stability. It leads with a quick ratio of 7.54 and current ratio of 8.32, meaning it can easily cover short-term obligation. Its low debt to equity ratio of 0.09 also signal low financial risk. Finally, Star Media is undervalued in the market with the lowest PE ratio at 4.44. This gives investors a chance to buy at a good price with strong growth potential. In short, Star Media offers strong return, low risk, and good value. Make it the best choice. That's all of our presentation. Thank you.